Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's have a look again on the euro currency. Some previous two sessions was relatively quiet compared to what we saw last week. So I would say it's absolutely safe haven, a kind of the performance on the euro in recent two sessions. But in general, there are a couple of moments exist that probably is worth our attention. If you remember, in the weekend we said that the picture that we see on the hourly chart, it seems that it more stands in favor of the upward breakout. Just because on the hourly chart in the weekend we have found the shape of the kind of the failure of the hand shoulders, or better to say not quite the failure, but the way how market actually was not able to complete the shape of the hand shoulders, moving higher, and wasn't able to touch the neckline when forming the right arm. And we said this is bullish sign, so this is not the good way for possible retracement, and it means that probably market could try to make another attempt to challenge the top, despite that market actually currently stands at the overbought. And yesterday on Monday, it mostly we could say that this idea still stands on the table, and it was confirmed by the price performance. On the daily chart, we see nothing really new. You can see the market is forming inside sessions. So after this strong rally on Friday, OP barrel has not been reached, so almost has been reached. So it's just 15 pips probably, 115 area, this OP target. And since then, market stands here. Simultaneously, dollar index has hit the 100 level, which is historically and psychologically is very important. And I would mention the actually similar performance on the euro and dollar, and both suggest tight standing near the important level despite existence of the overbought on the euro currency and oversold on the dollar. So if you take a look at the dollar, you could see collapse. This major target has been reached, big level has been reached. Some traders mentioned that here are some orders has been triggered with the downside gap here on intraday charts. It could be seen, and we posted in I have posted in our gold report. So if you would like to, there is the dollar index intraday charts where you could evidently see the triggering of the stop orders around 100 level. But take a look what's going on here. Market just stands stubbornly at the bottom. It doesn't show, even after stops have been triggered, it doesn't show any attempt to show bounce, some fast reversal, kind of the Russian rinse here has collapsed and stands flat. This is bearish sign. The same story we could see on euro currency, but in opposite direction. Now on the 4-hour time frame chart, we could see the confirmation of our suggestion. So on the 4 time frame chart, now evidently you could see the pennant pattern is forming. Once the reversal bar has appeared on Friday, we said we could try to use this reversal bar for possible position taking and watching for the possible patterns. On intraday charts, it's also on the hourly chart, if you remember, based on the reversal bar, it was that regardless cheaper to sell. I will show a bit later, but we already discussed it in our weekly report. Now we have the combination of the two signs that suggest the possible taking out of this stop. First is a bullish continuation pattern, with which is a pennant. I would mention even the reversal type of action, all the story that we just discussed on the daily chart and so on. Here is just the pattern, and take a look. Bullish dynamic pressure. So while trend turns bearish, price action is not. And it's forming high lows, which suggests the possible challenging on the top. I don't think that it will be really straightforward upward breakout, but at least market could retest the top. This is actually the reason why every time when we trade on an overextended market, no matter in what direction, up or down, our primary object for position close is the previous extreme point. So for us, this is the top. because dynamic pressure also has the minimum target around the top. So market just should retest this level. Taking into consideration that we're at the overbought, so probably risks that market will stop here or will not be able to move constantly higher seems right now significant. That's why we focused on this one. Now, finally, on the hourly chart, take a look what we have. Here's a bit extended chart, because here is also I would like to show you a couple of moments that might be interesting. So if we will be correct on this upper continuation, this will be the bottom line target around 1526. So that's probably this market could try to touch if the breakout will happen. It's one of the possible actions. Another interesting moment here is the opening of the week. So you can see what has happened right here. Market has opened with a minor gap down, immediately closed the gap, and has retested the lows of the week here, and mostly they were held. So it's, you can see the pullback and then stands flat. So the lows of the week mostly stands untouched. So here we have just this some kind of spike down here. Maybe market makers just grabbing the stops below the lows. But in general, you could see that market holds the minimum of the week really well. So taking it all together, in the current circumstance with this background, personally I do not want to take the short position. Of course, you could see your own signs, maybe you will be right, maybe market will drop. But in the current circumstances, based on all discussion that we have made, for me it seems that it seems more bullish. If, of course, as I always repeat this, if we will not get something really new from the Donald Trump or some external factor. Based on the technical picture that we have, I would suggest that current picture looks more bullish rather than bearish. Final points, take a look at the 10-year bonds. We have minor pullback here, and in a common way, the drop on the yields is always negative for the currency. So this action was not able to provide support to the dollar because that was the big disbalance on the US Treasury futures market. We explained this in the Telegram, what really has happened, why dollar was dropping together with the bonds. Usually they move in the same direction, so in opposite direction. So, but anyway, the drop on the yields, it is not supportive for United States dollar in the short term. So with this pullback, so here we also do not have any assistant to dollar strength, and maybe it's not really important, very vital factor, but still, this is the factor that we have. So taking it all together, I don't know, maybe, as I said, you see something else here, and it's really great. But for me, the overall picture that I see here seems more bullish. And in the current circumstances, I do not want to take any shorts and would be watching for possible completion of this stop that we have, at least the challenging of the 114.80 level. But since here probably some stops exist, market could try to complete the butterfly target with the 115.25 as well. In the validation point, all the stuff will be, of course, right here, the lows of the butterfly. So that's all for today.